Welcome to Money Hangout, our weekly interaction with you where we try and share our understanding, some insight on saving and investment issues. This is brought to you by Birla Sun Life and Value Research, Birla Sun Life Mutual Fund and Value Research. Today we are going to talk about uh, the favorite asset class, the favorite investments, or favorite things, which I would not say investment necessarily, but Indians are fond of the gold and real estate. Things have changed very different. Things have changed of late, and things can change dramatically in times to come. And it is important that you should approach real estate and gold differently than the way you have in the past. Simply because you must have the context, you must have the understanding. You should have a home. You should have a little bit of gold. How you should look at it? Should you consider them as an investment? Should you ever make an investment in real estate and gold to profit from it? If so, why? And if not, why not? I'll just share some statistics, my understanding of these two asset classes and how you should approach them. First, about real estate. One is that everybody should have one. You should have a home of your own. It provides you great emotional comfort. Uh, Worst of times, you will have a shelter. So that is a good enough reason to have a home. Then some of the economic reason, you save on rent. You don't have to worry about your landlord driving you out of that house. You get continuity. And potentially some appreciation as well. So saving on rentals, rental outflow, and potential appreciation is a good enough reason for you to have it. And that is exactly how you should approach real estate. If you plan to live in that house, and if it is likely to appreciate, and you will be enjoying it at the same time, then by all means, stretch a little bit to get that home, but nothing beyond that. Don't think of buying that second home. Don't think of buying that you know illusory home, which you may not get. Don't think in terms of trying to make big bucks by betting on a home for which you have just paid 5%, and you are expecting to profit from appreciation, so your leverage trade will work. That is not the way to approach a home purchase. There are two, three other things which you should have in mind. First, I would like to clarify that I would just like to share some understanding, my own perspective, in terms of why people have this great idea, why people have this impression that real estate generally always does well, and the charm of real estate. One is that real estate is real. You can feel it, you can experience it. Not that other assets that you invest in are unreal, but you can't experience them as much. So these, gold as well as real estate, you can enjoy them, you can experience them, and you see it physically sitting there. Even though if you have made an investment, its value goes down by 25% if you plan to sell today, but you still feel happy that uh, you can experience that home. So that is one aspect. The other is that people have misimpression that normally the real estate holding periods are very long, 20, 25, 30 years, and then the power of compounding coupled with appreciation, it actually gives a very magical number. Somebody bought a house for a land for 50,000 rupees, and today it is worth 1 crore rupees. Is not a very unheard of experience example. But the point is that if that is the time period for which you would have bought any other asset class, any other growth asset, yeah, that would have also appreciated. 30 years back, if you would have bought Sensex at 100 rupees, that will also be worth 30,000 rupees today, with a lot of ups and downs and with a lot of dividend yield, poured in. So I would say that a long period of time exaggerates, and typically that of course is an advantage, that you don't think of real estate as something which has to be bought and sold every now and then. You end up holding it for a long period of time. That creates a very different impression. But if you are a disciplined investor, you will have far other advantages. One is the ability, simplicity, diversification, small ticket investment. You can't buy a real estate with 5,000 rupees or 2,500 rupees a month. Then comes, your ability, low maintenance. You don't have to worry about looking for a tenant or maintaining that house. And even on a 30-year, 25-year, 30-year basis, the house goes out of style. The kind of construction, it remains relevant. Relevant or not, then it has to go into a reconstruction and all those things. So it's the simplicity of it. So that is why I think that one should not consider it as an investment. You should only think in terms of buying a home. Two, three rules which you should follow when buying a home is that you should not be overstretching. You should be prudent in your approach to buying a home, which is, you should have 20 to 25% of your down payment with you. Don't leverage yourself beyond a point. You should not be spending more than a third of your monthly income in repaying that loan, whatever you borrow. Third is that, which I think of late has become very important. Buy a house after a due diligence, so that you definitely get that house in a defined time frame, and that defined time frame is 6 months to 1 year. If you are unlikely to get in 6 months to 1 year, then I don't know how long that delay is, and all your plans will go haywire. You have to be very careful, more so in the north. The Delhi and NCR region is where I live in. I see all kind of horror stories around, where people have paid, waited, and they keep on waiting, and they don't have a recourse, and the legal framework is taking its whole time. We have the real estate regulations, but the real estate regulator is nowhere to be seen. Uh, some of these builders, developers, most of them are unable to honor their commitment, and they're only deferring it. So it's a very difficult situation, and that is the case with 80-85% of the houses delayed indefinitely, and when do you get it, you don't know. So be very careful about that. You just might, for the charm of your house, you just might be losing a lot of your money without a resolution in sight. So that is, and then of course, as I said earlier, that you should plan to live in that house and save on that rent. If you have these four variables in place, you will have a nice stay, and it will be financially extremely rewarding. Then comes gold. This is another thing which has gone into a very speculative fervor 5, 7 years back. A lot of things happened. Gold is not a productive asset. Think of the three things which an individual acquires. You either keep a deposit, or buy a bond, or buy a bond fund, or the money lies in your employee provident fund, so it is yielding fixed income. So you effectively, these are methods in which you lend your money to somebody. Then you buy ownership. Whether you buy shares or you buy equity funds, you are effectively doing that in some fashion. And then you buy a house. So house is also an asset which, in the worst case scenario, will give you a rental yield. And if the economic activity around the house, where you have your house, grows, then that house goes up in value. And if it's a great location, it commands a great premium. So if these three asset classes, there is economic logic why they go up or down. Uh, and there are reasons why they go up. If the variables are reverse of that, then it will go down. If the economic activity goes down, the house value will go down. If the potential outlook for that company turns bleak, and so the stock prices will go down. If your company, to whom you have lent your money, the general interest rates goes down, there is more supply of money, or that company turns out to be a poor credit, its value will go down. So they go up and go down for economic logic. In case of gold, there is no such thing. What happens with gold is, the price goes up over a period of time, because there's a history to it. Undoubtedly, it has a longer history than the organized financial history we have for stocks, bonds, and markets. The organized financial system that exists today. So, from the times of kings and kingdoms, we have gold has been relevant and a store of value, and there is a finite supply. But the whole value today, the outlook for gold is that more people will want to have gold in future. There is a finite supply, so the price will go up. But there is no economic logic. The damn thing doesn't produce anything. Uh, and of course, there is a possibility that the demand will go up steadily over time, and not in a speculative way. That itself is a reason enough. But beyond that, what happened to gold in last 5, 7 years is quite extraordinary. One is that the global financial crisis happened in 2008. Equity and bonds tanked first time together, and in a quite a unprecedented way. So that was a massive blow. investors ran for cover. They ran to buy gold. Gold was easy to actually access because 2, 3 years before that, the financialization of gold happened. So you could buy gold futures, could buy gold derivatives, you could buy gold ETF, and that created a phenomenal rise in demand for gold. Besides that, the emergence of India and China for cultural reasons, where it remains a ceremonial thing, and rising affluence created a whole new demand in India and China. So these two things coincided in a manner which I think is once in a century kind of situation. It can happen again. But that led to the surge in gold prices. And today, because of that, the gold prices, the long-term returns look so impressive. But over a long period of time, gold does not beat inflation, and understandably so. It is a store of value, and it should be looked upon that way. It should be looked upon as a high-value emergency fund. Nothing beyond that. Or you should look at it as a consumption. You should buy jewelry, you should enjoy it, you should show off, and you should consume it. Nothing beyond that. Not as a store of value or as an investment which you can say, because it's not a great investment when you buy it in the form of a jewelry. Your ability to sell it back at reasonable price, the transaction costs are very high. Financial forms of holding gold is also becoming little expensive. Of course, one is that the underlying asset is not very promising as a long-term investment. Then comes, should you buy it in the financial form? Not really, because there are two, three ways in which you can buy it. One is the gold ETF or the gold funds, which in turn buy gold ETF. They cost you 1.25% annually to hold them, and of course you'll be able to track the gold prices exactly as uh, less this expensive. Of late, there is one more alternative that has come your way, which is the sovereign gold bonds. Government of India issues that they don't want you to buy gold, so they have provided this avenue which earns you gold prices plus 4% annually, which I think is a great thing. Just in case you are unable to dissuade yourself from buying gold, that looks like the finest way of holding gold, or locking yourself into the gold prices with an additional yield without the expenses of gold ETF or a gold fund. So I would say that look at these things objectively. I've explained you the rationale why you should not. You should have a home, you should have the jewelry, you should have a little bit of gold, nothing beyond that. Don't look at them as a great investment. I don't think it will be a very productive asset, and that is the basic premise why I discourage you. Happy investing. This will actually free a lot of your money to be invested more productively.